Good evening. I'm just reading this book because he's my guest this evening, Basic Business Calculations by David Zidel. David is a lecturer at Wits Business School, and he does all the number crunching and all that sort of thing. The reason why I wanted David to come on the show tonight was I was looking through the business day on Tuesday, and I've kept it. So there you go, Peter Bruce. You see, I read your newspaper. You can take me to lunch now. But I was looking through it, and in the companies and market section, I came across a income statement and balance sheet and 6 months results for, I think it was Harmony. Evening, David. How are you?
Good. How are you?
Good. I'm very well. Now, there we go. Harmony. I came across the results for the second quarter and 6 months ended 31 December 2010 for Harmony, and I thought to myself, I started looking at it, and I thought to myself, what does this mean? What is that? What are it? And I was totally confused. So that's why I said, David, please come into the studio and tell us what it is. A consolidated income statement and a consolidated balance sheet. Okay, firstly, what's the difference between an income statement and a balance sheet?
Okay, so two very different things. The income statement is for a period of time, so it tells you how much money you've made from the beginning of one period to the end of that period.
Okay.
Your balance sheet is telling you how much money was invested in the company and what did you do with that money. So have you put that stuff into stock? Have you bought equipment, etc. with it? So the key thing from the company initially, one normally looks at an income statement.
Okay.
And the income statement, all it does, it covers your sales, less your cost of sales, gives you a gross profit, and then takes off all your other expenses and leaves you with that profit. So an income statement at its very basic is just what sales did I have, what cost did I have, and did I make a profit or loss?
Okay, so it says here, revenue.
Revenue, correct.
Cost of sales, production costs. Why would cost of sales be in brackets? What does that mean?
So anything in brackets in finance is a negative number. And
but how can your costs of sales be negative?
So the cost of sales aren't negative, but you've got your sales and you're taking that off, so you're minusing it away.
Okay.
So that's why they put in brackets. And if you have a look at that particular statement, it says the cost of sales. I think I've got a copy over here. It says cost of sales, and then it's got production costs and royalty expenses and all sorts of other things.
Yeah.
Can you see that slightly indented?
Yeah.
That means that all those expenses are totaling up to that amount of cost of sales.
Oh, I see. Okay, so all those other, I mustn't take those production costs, royalty expense, amortization and depreciation and all the rest and still deduct them. I add those all together and that's where I get cost of sales.
And that's where you get cost of sales. So
okay,
if
right.
you take your
so
revenue.
if it's in, so the first rule, if it's indented, that means it's already attributable to the number at the top.
The amount is summed upwards.
Okay.
Now
right.
it could be indented.
Why do you actually do your sums up? Hey?
We're trying to fit everything into one column. And you know where that's saying? Sum it up? Well, that's what we do.
Oh, okay.
So
Is that where the saying comes
that's
from?
where it comes from.
That's fascinating. Okay, so in other words, these oaks, the revenue was 2,990,000,000.
Mm-hmm.
The cost of sales, including all those, the sum up of all of those things was 2.5 billion.
Yeah.
So they made a gross profit of 484 million rand.
Correct.
Yes, well done, Oaks. It was
That's not bad,
it's not bad, eh? Yesterday. Okay, now there's all sorts of other stuff.
Just one thing with that indentation, there is one other thing that you might see in income statements is that they don't indent it, but they put it in a box.
Okay.
And it has the same effect.
The same
sum it
effect.
up, yeah.
Okay.
Everything else is subtracted.
Right.
Downwards.
Now I understand it. So these oaks I have made in this is the quarter. No, this is...
Yes.
Yeah, it's a quarter.
It's quarter. Interesting. Another thing interesting to mention, if somebody looking at this wants to know what's happening with Harmony right now, this is the results for the quarter ended 31 December.
Yeah.
We're now almost halfway through February.
Right.
So the information is delayed. So even though it's fresh off the press, it's already a month and a half old.
They're
So
already halfway through the next quarter.
correct. So that's why somebody who's looking to invest and looks at it can get an opinion from this. But it's not the what's happening right now kind of results.
But having said that, they also published next to it the quarter ended 30 September, which was the previous
Correct.
quarter, where they didn't do that well. They only did 88 million gross profit.
Yeah.
Only 88 million, I mean, yesterday. But interestingly enough, they also then put in the previous year's quarter. And year on year, they have risen from a gross profit of 315 million to 484. Now, that to me is a more telling number. That means that there's been good growth in that company.
Absolutely, absolutely. And one of the important things with the financials is, yes, you've got to look at the financials, but you've got to compare the company to itself. So where's the trend? Are they getting better over time or worse over time? So they're comparing here to the previous quarter. So
Yeah.
quarter on quarter, how have they performed? And then on the exact same period, the previous year. So that's 31 December 2009. This is 31 December 2010.
2010.
It's like, you know, Jeremy, if you say to somebody who's trying to lose some weight, how much do you weigh? And they say, well, I weigh 90 kilos. And, well, are they happy with that or not? And the thing is, if they weighed 100 before, they're ecstatic.
Yeah, but
if they weighed 85
yeah,
before, they're not that happy.
They're going to get cross.
So this is the one thing as well that when one must look at is, where's the trend heading?
Okay, so we understand now, we've got down to gross profit, we understand where that all fits in. Now, then all sorts of other stuff comes in here. David, please, help me, brother.
Okay, so your cost of sales are made up of the costs that are directly used in producing the product.
Okay,
So everything under cost of sales is getting the stuff out the ground.
right.
All these other expenses are the other expenses that a company has. And so they take all of that off. So you have your sales, your revenue, less your cost of sales, the direct costs involved, you've got a gross profit. You then take off all the other expenses, and that's where you're left with your operating profit. And that's your profit directly from the operations. And you can have a look there that they made it 296 million, but you look at the previous period and they actually made a loss at that point of
Yeah, because that's in
time.
brackets, 159.
When it's in brackets, 159 negative. That means that they made money on the direct 88 million, but then they lost money through all the other expenses.
Okay, but then if you look at the balance, at the income statement, in that previous quarter where they only made a gross profit of 88, to me, it shows also under this next section where we're talking about corporate administration, social investment expenditure, exploration expenditure, and all the rest of it. Those costs seem to be fairly fixed. Therefore, you would expect them to make a loss in that quarter where they only did 88 million gross profit. So what they're basically saying here is that they have to do a certain amount of turnover to get to a decent gross profit margin.
Correct. And specifically,
Hell, am I getting this?
You're brilliant. I mean,
No,
I
David,
just have to say and say yes.
You don't have to be nice to me, David. You don't have to. Okay, right. I think I'm.
Okay.
I think
So
I'm getting this slowly. Right.
if we take off those expenses and they get to that amount of an operating loss or an operating profit.
Yeah.
If you have a look in the previous quarter, they also had other expenses which were in brackets, which again meant a loss. Then you break it down even further and you get a profit before tax, and then you get tax, and then you're left with other things, and then you land up finally with your net profit or loss. Again, can you see it says net profit and the loss is in brackets, indicating that would be a loss. And they made a profit on both of those aspects over there. But what we're doing is we're taking it, your very basic income statement is sales, less all your costs, did you make a profit? As simple as that. What we're doing over here by breaking it down into the different portions is so that we can analyze it. And you analyze it by saying, well, where exactly did we lose some of the value? And that's useful for comparing one period to the next and saying, well, if our cost of sales shot up, then why did that happen? What were the reasons behind that? A gold mine specifically, like Harmony, one of the key things is they got the costs incurring taking the stuff out the ground, but they're what we call a price taker. They've got to take what the gold price is. It's not, you can't go and You can in a roundabout one, I'll explain why, but theoretically they can't take it out the ground and then go and decide I'm going to sell it at this price and go find somebody who's going to buy it at that
Depends
price.
what the gold price is at the
Depends
time.
what the gold price is. That's why what they do, where they can't do it, is they try to protect themselves sometimes by hedging. And what they do there is they pre-sell the stuff before they get it out the ground. Now, at the moment, it wouldn't be good for Harmony to have hedged because the gold price is going up. And if they'd agreed to sell it at the previous price when the gold was lower,
they'd be losing money.
Then they could be losing money.
You see, this is interesting because next week we're going to be speaking to Alan Thompson from the JSE about derivatives.
Right.
And this is exactly
So this links
that
directly
sort
to
of that sort of thing. Okay, so these guys are running on risk as to what the gold price is going to be. They're also probably all sorts of other issues at hand, labour relations and those sort of things, strikes, where you don't get any gold out of the ground for 2 weeks can suddenly hammer you.
Big time.
In a big way.
Yeah.
Okay, so now we've got down to the net profit and loss. Now it gets to me totally confusing because there are all sorts of earnings per share and ordinary shares and what is this obviously only appeals to the person who has shares in Harmony because they want to see what their earnings are.
Yes.
Per share.
You've bought a share in Harmony for a particular price, let's say 80 Rand. You want to know, well, did you make profit on your money? Did you on that investment? This is where you have a look at it. They take the net profit, 319 million, and they divide that by the total number of shares that have been issued. And that gives you a case over here of total earnings per ordinary share, and it says, again, it says in cents. And that means on every share that you bought, you made 74 cents profit for that period.
Now, is that distributed or is that just held in the share?
Okay, very, very good question. That belongs to the shareholder. That full 74 cents belongs to the shareholder. The company then decides, are we going to distribute it? In other words, are we going to give it back to the shareholder or are we going to keep it in the business? Generally, they're torn between two things. One, want to keep the shareholder happy, give him some money, some of the earnings, because that's 74 cents for every share. If you own 1 million shares, it's a substantial amount of money. Or are we going to put it back into the business? And when we put it back into the business, it's as if I gave it to you and you gave it back to me and I put it back into the business. And this links quite nicely onto the balance sheet.
Let's get onto the balance sheet in just a moment. David Zidel is my guest this evening. It's Mansfield's Money Sense. We'll be back in just a moment.